So your mortgage lender has reviewed your credit, your income, your debt to income, your assets, and they have given you an approval amount. And they've told you, hey, the best loan type for you is X or Y or Z. And they explain to you why that loan is good for you. Well, what happens next? This is where a lot of folks get confused, or they don't know what to expect because they call their lender, they got the pre-approval done, and they got the pre-approval on their email, but then what happens? They don't know. They say they can go shopping, so they let their realtor know that, hey, I got a pre-approval and now I can go shop. Here's what you do, okay? You have your pre-approval amount, you know what dollar amount of house that you can get qualified for. You let your realtor know, hey, I've been qualified by this bank, I've gotten a copy of the pre-approval letter, here you go, let's go ahead and start shopping for homes. Here's a very important tip that most clients don't know and will save you thousands of dollars if you do this. Once you pick out your home, before you submit your offer, call your lender and say, hey, I'm thinking about looking at this house on 123 Main Street. Can you please run some numbers on this property? Most people forget about that step and they just get under contract and don't know how much the insurance is going to cost. Is it in a flood zone or wind and hail zone? We're in Charleston, South Carolina, and these are things that come up on a lot of different properties that you always want to know and be aware of. I'm sure that there are other states out there that have their individual quirks when purchasing a home, so you want to make sure that your lender has run numbers on a specific property and has told you, yes, you can qualify to buy this home. It's important to do this homework before you place that offer, because once you submit an offer and it gets accepted, you're going to start spending money. You're going to start writing checks for earnest money or escrow deposits. You're going to start ordering inspections. You're going to start paying for appraisals. Once you have your lender just double check you and make sure that you are comfortable with the sales price, the down payment, the monthly payment, and the closing costs, then you'll feel really good and confident about placing an offer and getting it accepted. Versus the opposite of that, which is putting in an offer, getting accepted, spending hundreds if not thousands of dollars on those initial inspections. Then you get your loan estimate from your lender and the payment's higher than what you thought, the cash to close is higher than what you thought, and all of a sudden you don't feel so happy about it and you want to back out. And a lot of times there's an expense that comes with backing out. So have your lender double check a property before you place the offer. If all the numbers check out, make the offer, win the house, get under contract, and then continue moving forward. Once you get under contract, you'll want to call your lender and you say, hey, I'm under contract on this property. Now, some lenders may have already sent you a document checklist of what you'll need in order to get the mortgage process started, which are typically your driver's license, pay stubs, W-2s, tax returns, bank statements, any other documentation that your lender might ask you, like if a divorce decree or child support or alimony, or if you're paying federal taxes on payment plans. All of those individual documents, your lender will say, hey, this is the standard checklist, but in your scenario, I need items 1, 2, and 3. It's always a good idea before you start shopping for homes to just get all your documents together. That way, when you go under contract, you're not scrambling around on a Saturday or Sunday trying to find everything to get to your lender so that you can get closed on time. Once you get under contract and you submit all your documentation to your lender is going to submit that to underwriting. And underwriting is where a person double checks all of their numbers and calculations and make sure that you have enough money, verifies your income, verifies your employment, double checks your credit, make sure that you're all good there, and they will approve you typically with conditions. There's a couple different terms that are used for this: a commitment to lend or a conditional approval. A conditional approval, which is what we call it, is basically, we will lend you this money if you provide the following conditions. Hey, we need page 3 of your bank statement, it was cut off. Or, hey, I see that you make this $2,000 deposit and it wasn't payroll, it wasn't electronic. Where did this come from? Whatever the conditions are, your lender will give you the list and then you'll put them together and give them back. As long as everything checks out, then your loan will be fully approved. Now, there are a lot of different steps that go into getting fully approved that have nothing to do with you. Maybe verifying that there's insurance coverage, reaching out to the attorney or the escrow company and getting the title work and just proving that the home can actually be sold and that whoever's selling that property is the real owner and they have the ability to sell it. Making sure that any thing that's owed on that house is going to be paid off at closing. So there's other factors that go into getting your mortgage that don't have anything to do with you, but the lender still has to verify them because they're based on the property. Once everything checks out, like all of your borrower conditions, you have insurance on the home, you have title on the home, you have an appraisal on the property, everything is usually stamped, fully approved, and then you get clear to close. And CTC, or clear to close, is everyone's favorite words because that means that your loan is fully approved and the lender wires the money directly to the attorney or the escrow company, depending on the state that you're in. You show up with your driver's license and a cashier's check, or you wire the money that you need to send for your down payment and any closing costs that you might be paying. Hey, listen, if you found value in this video, I would really appreciate it if you give me a like and subscribe if you are getting ready to go through the process of purchasing a home. And if you feel like I missed something, or if you have specific questions about your scenario, drop it in the comments and I'll be sure to reply. See you next time.